Happy Friday, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Friday, the 7th of July, 2017. Thanks for joining me again on another Trader Bite. It is like Friday today. I would really appreciate it if you'd hit the like button on your screen on the stream. If you don't see one, find the YouTube link to go to the live stream and hit the thumbs up button on there. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, quite bullish, fairly bullish on the NASDAQ. The NASDAQ's up 20.5 points. It is the leader on the board that I watch, followed by the Russell, which is up 3.9 points or 0.27%. And then the US dollar, the S&P mini, and then the Dow. Everything else is down. The Euro stocks, Bund, 10 years, DAX, and so on. The laggard today is crude oil. Crude oil is trading down at 44.80, down 72 cents or 1.6%. Crude has been on a downtrend now for 3 days. It popped up on a large draw yesterday on the crude oil inventories report, but took all of that back. A fair amount of resistance on the volume profile above in crude. The area that was of interest yesterday was around 46.60, and it stopped just below it at 46.53, turned and shot down to 45.18. So we're still trading lower, although it's off its lows. Crude is off its lows about 80 cents from the low of this morning. And looking at what's out there, across the planet, all the U.S. equities are up slightly, somewhere between 0.23 to 0.3%. The European markets, pretty much everything is up or flat, except for the IBEX and OMX. Asia is also up. The currencies, the euro is slightly lower. It's trading around the 114 handle again. The euro has been fairly strong over the last couple weeks. Gold has taken a bit of a hit. Gold's trading at $1,220 or so. It got as high as around 1,260. But what's driving us today is the jobs report. The jobs report came in much stronger this morning. The report showed non-farm payrolls of 222,000 plus 222,000 versus 178,000 expected. The private payrolls came in at 187,000 versus 170,000 expected. The unemployment rate came in higher than expected. We wanted 4.3%, or we were expecting 4.3%. We got 4.4. And then on top of that, the Canadian net change in employment came out at the same time. Canadian net change came in at 45.3, much stronger than the 10,000 expected. Overall, lots of good news. The G20 is going on. President Trump has met Russian President Putin for the first time today, this morning, and I'm sure there's going to be a lot of buzz about that. Other than that, there was a flash crash, a small crash, a drop in silver. Silver dropped to about 14.34 from 16 in less than a minute yesterday, or overnight, and recovered. If you look at a silver chart, you'll see a quick blip down and a recovery. And then on top of that, the yen's getting hit a little bit because the Bank of Japan went on another buying spree. The currency fell by 0.6% against the dollar. That's a big move for a currency. It said it would buy an unlimited number of Japanese 10-year notes at a yield of 0.11%. That's intervention for you. As far as what we're looking for going forward today, we've pretty much taken care of the big numbers, the big overnight numbers. But looking ahead, we're getting EIA natural gas at 10:30 Eastern, expecting 66 there, and then a Baker Hughes rig count at 1 p.m. Again, that number hasn't been all that important lately. As far as speakers, we only have one. Well, it's not a speaker. It's an event. It's a release at 11 o'clock Eastern today. We're looking for the Fed's release of a July 2017 monetary policy report to Congress. I'm not sure what we should expect based on that. So I'm not going to review yesterday's action because there was no trader bite yesterday. My connection was not stable enough to hold one. I would just have you sitting here uh, telling me that um, it's disconnecting. So let's move on quickly to what it has done over the last couple of days. So we look at Wednesday, and we see that Wednesday was a bullish balancing day. We ended up Wednesday, which is right here, with a P-shaped profile, a fairly weak low. But overall, the market started to move towards the target expected on Wednesday, which was 24.35 and a quarter. Remember the volume point of control. The market is uh, quite timid right now, just kind of sitting sideways, continuing to explore this balance that we've been in. So we've had that big move down last Thursday. We recovered and have flagged on Friday. We continue to flag on Wednesday. We had Monday, Tuesday off. And then we broke the flag to the downside and a continuation move yesterday. So yesterday, to me, technically was a continuation of last Thursday's action. And last Thursday's low is 24.02 and a quarter in the ES. That is last week's low. It's also the low of June. So that's how things are set up. As far as what we did yesterday, some pretty wide swings. We had a pretty decent, so we opened right near the low of the prior session. My primary hypothesis, I didn't get a chance to post any of these. My primary hypothesis is an open, drop, push up, impulse up, pull back to the prior day's low, this green line, and then a continuation to 24.75, 24.2775, and then holding steady and recovering this point of control. That's what I was looking for yesterday. I was looking for a lower low, lower high, and a test below. That was my hypo 1. That didn't work out. Hypo 2 is exactly what worked out. A grindy, responsive open auction in or out of range, and then the impulse down, which occurred early. And then I was looking for the usual consolidation and then continuation move. So yesterday, the expectation was for it to push higher, impulse down, come back, retest the open, and then continue lower. And then what I was looking for yesterday as an extended target was 24.0225 on an extended basis. The market based yesterday put in a pretty good base yesterday, and we had some really decent consolidation and support range. This is what a good, in my opinion, a good zipper support pattern looks like. The market pushes up and it just is fighting and is not able to continue lower, and therefore creates these zippers, these boxed areas, and those act as support, and that's the opportunity. This is the trigger set up long back into the prior day's range. Remember, up to this point, the IB high and the IB low had not been breached yet, so we're looking for that 97% probability. And once it creates this support and starts to push up through the mid, which is this blue line right here, once it just pushes up through the mid, then we're looking for the long, and we're looking for a breach of the IB high, which again did not happen. So there was an opportunity here, pretty good rotation up, and then it's just complete failure, and then we ended up breaching the IB to the downside. Buying was very again timid on the way up. It seemed like the participants were shy about lifting the offer. If you have Bookmap, you would have been able to see that pretty well, that the prints, the circles that it was printing on the offer were not very aggressive. yet the bars or the gray areas continue to persist as the sellers reloaded, and then ultimately the buyers got exhausted here, and we were just left with sellers that caused this move down. This also happened at about the same time as crude oil dropping, so there's an extra push there. So we move down into this consolidation that I talked about. See that consolidating again? That is a normal behavior. This is a high volume node, and then it comes back, gets tested, high volume node again, and then it finally breaks out. And then that becomes, this area then becomes our initial resistance on the way up, which was what we saw last night. So this is what happened yesterday. Let's look at what happened last night. I've changed the chart here to a 1 minute just to see. Let's move to three. I moved it to 1 minute just to see where the scene of the crime was for the unemployment rate. But here's yesterday's close right here. And then we open, and then there it is. We're pushing into this 1150, or it's actually more like 11. It poked through to 1150, and it poked through again to 1175. But that is the resistance area left behind from yesterday. And that's where we sat all night long. We just, I'm not going to sing Lionel Richie right now. I'm dating myself, but all night long, all we did was auction sideways in this tight range. That is a very, very tight range. We're talking about the entire night spent in a seven or in a four point range, basically 3.5 to 4 point range until the non-farm payrolls. The non-farm payrolls come in strong, the market pops up, and we have the classic impulse consolidation back to mid. See how it almost touched mid there, missed it by 2 ticks, and then the expectation is for a continuation higher into the open. Okay, so that's a summary of where we have been. That is the context and the story on which we build going forward. So, what have we done so far this week? Okay, so we want to keep an eye as we trade in our, you know, whatever 10-second time frame, 1 minute, 5 minute, 3 minute, whatever it is time frame. It's really important for me before I start trading to pick up the context by checking what the bigger picture, what the bigger players are doing. What I know that I'm trading the smaller waves. I'm surfing the smaller waves as a day trader. That is my bread and butter. I'm not a swing trader, but I want to know what the big ocean waves are doing way, way, way out, which end up in ripples through the day. So it's really important before you start your day, and I try to do that periodically over the Trader Bite, to go back and check what have we done, what has the bigger picture achieved. And this is the weekly chart. And if you look at this, this is last week's chart. This is the period. This is the time. This is the point where we broke the time framing up on the weekly. We put in this low on Thursday, and then Friday we consolidated. Friday we have this blue here. We consolidated in the middle. We closed in the 2420-ish area on Friday. Then Monday, Tuesday holidays. Wednesday we kick back in, and Wednesday we start lower and we finish higher. And then yesterday we open lower and finish lower. So what we're doing is uh, we're expanding or stretching the rubber band that is wrapped around balance, and it just keeps snapping back. So we stretch it and snaps back, stretch it and snaps back, and it's snapping back in this area, which is governed by the point of control at 35 and a quarter. Let me turn down my news feed here. Is maybe interfering with my voice. Uh, and so this is what we're doing. We're pulling the rubber band away from 35 and a quarter. Then as soon as the buyers let go, snap, it goes right back into that 30, 35 quarter area. And then we start to pull it the other way. And then as soon as the sellers back off, it just snap, rubber band goes back to 35 and a quarter. And that's where we've been. And I don't see a change here yet. I don't see a major change. So when I split this profile here and look at what we've done day to day, this is what we've done day to day. We closed the gap yesterday. We opened inside of the lower end. We've tested lower, and we're currently trading in the 2413 area. So we're back in here somewhere. We're trading right in here. So overall, the market isn't taking a bet. With the non-farm payrolls coming in overnight, the stock market's gonna is likely to open and have a directional move on the open. So I expect the open to be fairly well participated. The number was much stronger than expected. So with that being said, let me turn off my flex levels here to clean this up. With that being said, I'm looking for an open today that is an open auction. We're opening in the fat part of the yesterday's profile. I know the point of control is down here, but we're opening in the fat part of the profile. We have the point of control was there yesterday before it migrated down on the close. I'm looking for an open auction, and then I'm looking for it to test higher first, and then uh, get its sellers around 2420. So this is a 2420 area right up here. If I see that the 2420 is battled, so if I look at my heat map, my S5 book map, and see that 2420 is being bought and it's just selling our icebergs. If you have the iceberg indicator, it'll show you that there are that the book is reloading. If I see icebergs coming in and selling, that I'm looking to sell, and then the target becomes 2408 on a large impulse down, and then pull back, and then a potential for a continuation lower. Okay, that's hypo one. So hypo one, open auction, continuation of the impulse made in the non-farm payrolls, pull and then push to 24 to 20, break the 2417.50, push to about 2420. I expect resistance there, and then I'm looking for it to fail for an impulse down. So all the money that went into buying the non-farm payrolls is likely to become, those participants are likely to become sellers, and I'm looking for a quick move to 2408 and a quarter. Now, if we open and we start to move lower towards 2408, 2410, then I'm looking for, again, a base. I'm looking to fade either way. Why am I fading either way? Because we are in balance, okay? We are operating in balance. And so 2408 or so, 2410 really, I'm looking for a high low. I'm looking for an impulse up. And in this situation, I'm looking for the break of the 2417.50 for the market to reach up into the 2150 to 22 or so, and then settle somewhere in the 2415-16 area, the HVN of yesterday and in the middle of yesterday's profile. That's hypo 2. So in this case, I'm looking for a push into around 25. 25 becomes the number. It is a low volume node on the bigger picture. So I'm looking for 25 for a key resistance. So if I take the long, I'm going to look to work ahead of 2150, yesterday's high. And then, well, it wasn't yesterday's high. Yesterday's high was about 22. And I'm looking to work something ahead of 2150, and then I'm looking for around 2450 for an exit before I expect the market to roll over. Those are the two main ideas coming into today. We don't have any holidays next week. There's no reason for this for today's trade to be anything but a standard Friday non-farm payrolls Friday play. Monday, however, Monday I'm expecting to the traditional Monday after non-farm payrolls, which is sleepy, droopy kind of trade, and that's where we're likely to come into. Hypo 3 is trend down. Hypo 3 is trend down. Hypo 4 is an attempt open test drive down, open test down drive up. And the target then becomes 29.50, and then if we're lucky, 34 and a quarter, 35 and a quarter. Not very likely. Mostly, I expect the market to be stuck where it is. Okay, so that's all I have for you. Again, it is like Friday. Please hit the like button. Hit the like button before you leave. Before you leave today, if you don't see the like button, it's a thumbs up button. There's some clown who likes to come in and just hit the thumbs down every time. I have no idea why they would waste their time that way, but hit the thumbs up button on your screen. If you don't see it, look for the YouTube symbol. That'll take you to the stream, and then hit the like button there, the thumbs up button there. Good luck today. It is Friday. It is non-farm payrolls Friday, so it's likely to slow down in the middle of the day and then pick back up into the close, into the weekend. So just be careful and pick your spots, okay? Good luck. Take care.